Hello everyone, this is the Cowboy. Welcome to Elliott Wave Cafe, and this is another episode of our kind of coffee and stocks edition, where we take a look at usually different things that we find interesting in some of these stocks. And for the purpose of this video, I wanted to take a look at the divergence and then kind of follow through with an interesting wave count that I saw in this company, and it's called ROST. So this is ROST Stores, and it's basically a consumer discretionary store. They have consumer discretionary stock. They have stores, clothing stores, all over the country, and they seem to be doing really well. I mean, they're kind of fairly priced, and they have a lot of customers, and the price has been going up ever since 1995 at a pretty much of a steady pace, with the exception of this period between 2004 and 2008. Maybe for about 4 years was this kind of a sideways consolidation, and here more of a distribution. This has been pretty much on a tear, and you've gone from, let's say, $5-6 here to about 100 and almost 30. And today we have broken to all-time highs, and it's got my interest. I'm actually long the stock, and I wanted to kind of show it to you, to kind of pick your interest and see what you think about it. But I do wanted to take a look, since the purpose of today's discussion to begin this, it's the divergence. I wanted to take a look at the way this kind of price action evolved, and what happened to the RSI during this. It's a lot of traders are looking at divergence, and they try to use it obviously to their advantage, but it's a double-edged sword, right? It works when it does, and when it doesn't, it can be very hurtful. And most of the traders use it to short stocks and say, well, the price is making a new high, the RSI is making a lower low, and that's a divergence between the price and the RSI. That means that the stock should sell off. Now you can notice in here that you have a bunch of divergences ever since 2008, 2009, yet the stock continued to make new highs here, new all-time highs. It's in a very, very nice and clean uptrend. So you can use a divergence shorter term. It's a very important tool to have at your disposal, and at least it can keep you out of trouble. But personally, I've in my beginner years into trading, I've used it to short, and I've gotten hurt a lot of times. And since then, I've kind of decided, why don't I use it to my advantage with the trend instead of fighting the trend and thinking all the time that the market is going to sell off. So, I do notice the divergences. I observe them overall. I maybe expect the stock to sell off, but I will use that sell-off as an opportunity combined with some of my early counting to join the uptrend and move higher. So as you can see in here, basically back in 2008, the price made a new high, we sold off in here, and then we made a new high again, and you can see that the RSI did not. So this was followed by a very, very small sell-off in here, just a very, very short sell-off, right? Maybe not enough. Maybe you would have expected that based on this, the stock to move much, much lower, right? So if you were shorting the stock in here, you probably got stuck. The thing moved a little bit higher, you notice again, and then you get stopped out. So once you have the divergence, you get a little bit of weakness, but it doesn't have to be very massive. So now the market continued to climb back up higher here, nice and clean, and an impulse, and then you reach a super high level into the RSI, and this is about 85, almost 87 in here, which is quite extreme for stocks. So the market reacted a little bit by being overheated, let's say overbought, we should call it. You're getting this a little bit of a sell-off, and then you're waiting for a new high. This new high happens, but the RSI does not. You can see up here at the bottom, right? So now you're having a negative divergence, new high in price, but a lower high here into the RSI, and you're getting all excited and say, well, let's short this because I see a divergence, and let's sell this off. So the stock, sure enough, sells off a little bit here, maybe for about, 15-20% of a sell-off, but it's in 3 waves, nice and corrective, and then it moves back up higher. It creates another divergence as the stocks move higher between this divergence here and this one. And now you might get excited and say, oh boy, this is going to be a bigger sell-off, and you're shorting again, but you're basically already selling off about a 5 or 6% move. You might capture some of that, you might not, who knows, or maybe you're expecting more and it doesn't happen. All the while, all these divergences that you see in here, right? I mean, look at this one that started from 2015 all the way from 2000 to 2016. The market was climbing, the RSI was in a big divergence, and it provided a sell-off. But you don't know exactly when that's going to happen, right? You might get stopped up a few times, you might get exhausted, and eventually that sell-off is going to come. You might be very, very quick to get out of it, because the sell-off might not be what you expect. So my point here, it's try to use these divergences as methods of joining a trend, and for them maybe to loosen up on your position and kind of reinitiate it on the sell-off, or kind of add to it, kind of trade around the core position on it, because they're much better used than as a full-on indicator where you expect a big market sell-off after that happens. We did have, obviously, this major event back in March of last year, and this was kind of preceded by the drop into the RSI as the market was making new highs. So possibly this would have been the biggest kind of reward that you would have gotten based on the divergence in anything that's happened so far into the stock, right? And let's say that you would be losing money trying to sell the stock, all this to just make it all back on the sell-off. I don't think that's a smart strategy. So, and then you can also notice overall, I mean, we've never gone anywhere that 85, 87 RSI. The market actually continued as it was climbing from this high. The RSI in here continued to actually drop and drop and drop and drop and drop. Now you can say that this is the biggest divergence ever and you're going to get a big sell-off into the stocks. I don't think that's going to happen. The market actually is breaking to new all-time highs, and I'm going to continue to trade it as such, considering this a nice and massive uptrend. Now take a look at the moving averages as well. In here you can see how we're climbed above the 200-day moving average. We're above the 55, above the 20 in here, and this to me looks like a super nice and clean uptrend. Let me show you the count, and actually what I want you to do is I want you to stop the video in here and try to come up with an interpretation of a count of these lows kind of moving up into these highs, right? Personally, I'm considering this whole thing a flat. I'm looking at this as being an A that's up in B and then down in C, and that's a clean expanded flat, possible a wave 2 or a wave 4. We have no way of knowing, but we do know that we're breaking to new all-time highs in here, and then this move is not complete. It could be an ending diagonal. It doesn't look like it because we have no overlapping. So to me, I'm going to look at it in regards with the whole market and everything that's going on fiscally and financially and everything else. I want to stay bullish this market. So I'm probably favoring more a second wave than a fourth, but it doesn't mean we're not necessarily going to get it. So what I want you to do is I want you to kind of take a look and start to dissect this move from here and try to give me a count from these levels as we're breaking to new all-time highs. So I'll see you back in a couple of seconds. All right, so I'm back, and here is where here is my count, and this is how it looks, and I'm gonna walk you through it really quickly so you see what I kind of come up with. So to me, that's my wave 1 of the lows, and this is wave 2, and I'll show you the composition of this wave 1. So I'm looking at this wave from, and I'm going to go a little bit lower in here so you guys can see on the 12-hour. We actually go on the 6-hour in here. I'm looking at this as being a leading diagonal. I have a 1, 2, 3, 4, 5 for a wave 1. I have a wave 2. I have a 3. I have a 4, and I have a 5. So clean impulses out of here. Wave 1, it's the longest. Wave 3 is shorter than 1. Wave 5 is shorter than wave 3. I have a zigzag in here. I have a zigzag in here. And then these are nice impulse legs. So this is all clean as a leading diagonal of the lows. After this leading diagonal, it comes something very, very interesting. And this is maybe where it's very, very hard to kind of count something like this. But you could see that we actually moved sideways since April 20 all the way back here to, the end of October. And, the price pretty much did nothing. And when stuff like this happens, you're either looking at it as some kind of a triangle in development, or you're going to look at the super complex correction. And as we know, triangles in wave 2 are not, they're not allowed. So the only thing that we're kind of left with to count, it's a complex correction if we don't have necessarily a zigzag. And in this case, we actually have a double three. So we have a flat in a wave W, and you can see the move in here. So this is a clean three-wave declining wave A. You go up in B to new highs, and then you're coming down in wave C. And you can see in here that you're actually having a 3, 3, and then this is an ending diagonal in a wave 5, in a wave C, through a 1, 2, 3, 4, and 5. Right? So this is a nice flat correction where basically we call this a running flat because wave B went up the origin of the wave A, but wave C, well, actually, not. Wave C kind of stopped exactly at the lows of this wave A. So I'm fine with the running. If he was going to make a new low or a deeper low in here, he would have been, more of a running flat, just like the one I've showed you before, the bigger one. So then you have this connector wave X, which connects these two patterns in here. So you have a running flat, you have a connector wave X in here, and then you have an expanding triangle in a wave Y position. And this is a super nice one. They're kind of rare like this, and you can see a wave A in here. Super nice move in here, go up in B, down in C, up in D, and then down in E. So there's nothing more beautiful than this expanded triangle in here. And we're going to consider this as part of being as part of this wave Y. So this is what we call a double three, because you have quite of a rare pattern here in this wave W, and then you have another rare pattern in this wave Y, and this is what we have. So you go wave 1, wave 2, and now let's kind of climb back up, and we're looking at a wave 1 of the lows. This is a 1, a small 2, a 3, triangle in 4, up in 5 for the wave 1, and then we're having, I think this is another flat here in a wave 2 where we go in a 3 waves down in sharp in 2 in C. So that is a flat in here. Then you got another 1 and another 2 in here, and now you're breaking to new all-time highs. And I'm actually looking for this market to continue to go much higher, to target, let's say, you're going to get this third wave in here. So that's, I just kind of place it as a minor wave, and then you have this wave minute that I think it's in progress, wave 3, 4, and 5. Then you're going to get a pullback. Then you're going to finish that primary wave third, do a fourth in here that's probably going to be a little bit larger. So we'll deal with that when we get there. But kind of that's my outlook from these lows following this massive flat, expanded flat corrective move that you have in here, right? So once again, expanded flat in here, followed by leading diagonal, double three correction here in an A, B, in a WXY, 1, 2, 1, 2, and then we're breaking to new highs. Now, the negative part in here, I could be wrong that this whole thing is just a massive B wave. It's choppy, it's overlapping. This is an A that's up in B, and you're actually going to get a C wave, move back in here. The problem is that this is a clean impulse, right? And you cannot really get a flat if this is an impulsive move. This has got to be a 3-wave corrective move. So that's why I have doubts that this is a B wave into new highs. I think this is an impulsive move, and it's something that's actually getting built in here. The other way that it could be, it's possibly an ending diagonal, where you would have this in some kind of a wave 1, let's say in here, that's a wave 2, you're going in a wave 3, you're doing some kind of a 4 in here, and then you're doing a 5, and you're doing something like this. And, I mean, this looks a little bit bigger than this already in terms of, so that's why I'm not kind of favoring this for a 5th wave. And you can see how all those kind of teases that want to keep me bearish are falling apart, and I'm kind of remained with the bullish one that tells me I think this is going to break to new all-time highs and it's going to continue to push. So guys, listen, I'll leave it at that. Please hit the thumbs up and subscribe to the channel. Visit all our videos on this channel. Come and visit us into the pro room as well. There's a 7-day free trial on there. We do a lot of things there, yeah, there's also a public channel. The links are below. So thanks for watching. I'll see you on the next one. Bye-bye.